Welcome back to the Global Common Channel. So glad to have you with us today. We're now going to continue to the highlight of this session, where we'll be joined by Jinesh Patel, partner at Integra Partners, who will be moderating a panel on embedded finance. Now, embedded finance, if you're not familiar with it, is a term used for non-financial firms that directly offer financial products and services to their customers while retaining overall control over the customer experience. In this panel, we will be joined by Arthur Lang, the Chief Executive Officer of Singtel. We will also be joined by Aung, founder and Group Chief Executive Officer of payments platform 2C2P, and Bill Borden, Corporate Vice President, Worldwide Financial Services at Microsoft. Let's cross over to Jinesh and his panelists to talk more about the future of embedded finance.
Good morning, good evening, everyone. Welcome to the Singapore FinTech Festival and this debate on embedded finance. My name is Jinesh. I'm an early stage venture capitalist here in Southeast Asia, focused on financial services and healthcare. And it gives me great pleasure to discuss one of the most topical thematics within FinTech globally, which is the topic of embedded finance. I have a pretty diverse group of panelists who come from backgrounds in telecoms, payments, and infrastructure and enterprise. And so before we start off and dive into this topic, it would be great if I could introduce each of the panelists to give a little bit of background on themselves and their areas of focus before we start talking about what we think is the aspects of embedded finance that are relevant for everyone. So maybe, Arthur, could we start with you?
Sure. Morning, afternoon, evening, everyone. My name is Arthur Lang. I am the CEO of the international group over at Singtel. Singtel is it's a mobile and telco communication services provider that just not only provides communication services in Singapore, but actually across the region, countries like Australia, India, Philippines, Thailand, Indonesia, and across about 14 countries in Africa. And our customer footprint across the region and through our ownerships of various telcos around the region account for about 700 million. And I also look after the mobile financial services business for Singtel. And mobile financial services includes digital payment services, a wallet, a cross-border platform, direct carrier billing, as well as hopefully as we move on into digital banking, if we do get the license from the MES. Prior to that, I was a CFO, group CFO of a real estate company, as well as prior to that, I was in investment banking. So nice to meet everyone.
Thanks, Arthur. Aung?
Good morning, good afternoon, good evening, everyone. I'm Aung, founder and CEO of 2C2P. 2C2P has been in business for about 18 years, providing online payment services across Southeast Asia region. We help two types of enterprises. So global enterprises entering Southeast Asia and selling their products and services to Southeast Asia population. And we help Southeast Asia enterprises selling within Southeast Asia and beyond Southeast Asia. I'm very happy to have a chance to discuss about payment infrastructure in Southeast Asia. The subject very dear to me. Thank you.
Thanks, Aung. And Bill?
Thanks, Jinesh. Good morning, good afternoon, good evening, everyone. Arthur, Aung, great to join you on this panel. Again, my name is Bill Borden. I lead Microsoft's Worldwide Financial Services Industry team. And we define that industry group as covering banking, capital markets, and insurance companies. I, with my team, have responsibility for defining the strategy for Microsoft's approach to thinking about our products and capabilities and services and what we build, who we partner with in terms of our technology partners that leverage our capability set or their third-party solutions. Then how do we take those solutions and work with our field sales teams globally to work with our customers around solving their digital transformation challenges and their business problems related to the use of technology for agile change. And so the responsibility of our team is to work across the Microsoft platform in order to specifically serve the needs of the financial services industry.
Thanks, Bill. So let's dive in. Maybe let's start with probably the toughest question, which is, there's a lot of hype around embedded finance, and it's been one of those topics that has started to become, one of the more topical subjects on a regular basis. So it would be great to start by, looking at this from a 10,000 feet perspective and saying, what are your thoughts on this hype? Is there really a place for embedded finance in other verticals, and where does your company and the way you think about it sit? So maybe Arthur, let's start from a telco perspective. Where do you see embedded finance? Hype, reality, or something in between?
Thanks, Jinesh. I think, well, hype versus reality. I agree that if you look fundamentally about the what embedded finance is all about, right? And it's really the provision of traditional financial services through, non-financial services platforms or even digital platforms that one would not expect that particular platform to be providing financial services. And in fact, I would say, embedded finance taken to the max, to the extreme, is in a way to the customer so intuitive that it is not so obvious that it is a financial services that the customer is consuming. In fact, it's a means to an end, to an objective that the customer wants to achieve. So is it hype? Is it reality? I mean, I think the reality is that there have been many embedded finance services already introduced quite a while ago in this part of the world. And it's largely because if you look at the region, and the region I know is a very diverse region, but maybe focus on Southeast Asia or Asia as a whole. Many countries in Asia are mobile-first countries, right? Where the consumption of content, like your first movie, is on a mobile phone instead of going to the cinema. Your first banking transaction is probably not in a bank branch, but on a mobile phone, right? And you see mobile penetrations are at much higher penetrations in many countries around this region versus bank penetrations or credit card penetrations. I mean, most of the countries around Southeast Asia, for example, where I'm familiar with, banking and credit card penetrations are below 10%, whereas mobile penetrations are like in the 60s, 70s, 80s, some countries even 100 or more than 100%, because more than, one person owns more than one mobile device. So, it's been around for a while. An example that I can give for is, in the telco world where I'm familiar with, where if you were to purchase, Netflix or some video content or a game, or if you want to top up your mobile, your data plans, many telco services, or rather many telco operators already provide direct carrier billing, as well as mobile top-ups, where they're able to use wallets to top up their data plans, or they use direct carrier billing. So they basically are able to pay for a game, for example, using their mobile account, right? So in effect, it's the operator or some other third party providing credit to the customer, but the end game for the customer, the end objective is to purchase content, to watch a game, play a game, or to watch a video. But you know what? Financial services had been transacted. I guess now with AI, with data, with IoT, I think that helps to accelerate that move towards embedded finance. And I think that's what makes it so exciting, because many different services can be put together to provide what the customer wants, and financial services become so, invisible is probably too strong a word, but it becomes so seamless, so intuitive that it makes it so simple for the customer.
And Arthur, if I think about that, that's more at the consumer level, at the retail level, at the end product level as well from a services. But at the enterprise level, Bill, how is Microsoft positioning this? Because there are so many verticals that are just not, I would say, FinTech or finance ready to drive solutions provisioning. So how do you think about this in the context of your business?
Yeah, it's interesting. I think the intersection of many industries has a common point with some level of financial transaction, right? The exchange of value for something. And so whether it's automotive or whether it's traditional retail, whether it's manufacturing, even energy and power, when you think of the retailing element of that with service stations, there's this element of creating an experience around that particular industry group. And at some point in time, there could be an exchange of value for service. And so from that standpoint, we're thinking about it, and payments is the natural evolution, as Arthur was talking about, where that's occurred, right? With regards to having whatever mechanism and form of transfer of value that the consumer wants to use or a business wants to offer as an option. All right, debit, credit, e-wallet, ACH debit transfer, newer technologies like Bitcoin, whatever that value exchange is, it's usually at the center somewhere related to that. And so the idea of that embedded experience and making that happen as an extension of either banks or what fintechs are trying to build to do that, there's really a bit of a race, right? And so when you think of traditional banking institutions, they obviously have a vertical business model to work directly with their customers to create an environment where customers think of them first for all of their financial needs, and they want to protect that. So in order to do that, they want those services available, but they also know that their customers are in a bunch of different other experiences. And so when that transaction truth comes to a point around a payment, how is their capability used for that payment? Because that's where they're viewing they're going to get disintermediated. And so they want to participate in that. They want to make sure that consumers, when those transactions occur, still remember potentially their brand as the one that allowed them to have that transaction. So how should that work in terms of vertical models and horizontal models and ecosystems to make that work? And I think payments is where there's a lot of energy and a lot of investment to do that. But I will say it's not just payments, it's expanding out to other things, right? Think about other things that you naturally do with regards to your lifestyle. So if all of a sudden you are purchasing a home transaction, so how does insurance automatically get embedded into that transaction approach if you're now making a new purchase related to insurance or something of that nature? So if you're thinking about a transaction related to something that involves a high risk experience, what might that mean in terms of your personal insurance? So you can start to extend these models in a lot of experiential things. And I think the financial services, the traditional ones, are thinking about how do they play in that because another fintech is going to come play in that if they don't.
Yeah, I find it highly amusing because I always say when I speak with investors and portfolio companies, my excuse is that fintech isn't everything. And so I have the ability to look at every single opportunity and not just ones specifically related to financial services. But maybe the topic of payments is a very topical one as well, because I think where China has led is that payments infrastructure has been the key to embedding all types of financial services. And the Chinese tech companies have been the pioneers in this. When I look at the same type of issues in Southeast Asia specifically, payments is still going to be the key to driving initial adoption, initial traction. And if I think about that in the context of how the ecosystem's evolved, I would still say that we're significantly behind other parts of the world. So Aung, can you give us a little bit of a perspective on the whole kind of online payments infrastructure and where we are today as a backdrop to kind of where we feel embedded finance will come through?
Sure. Payment has been evolving throughout the year. I mean, if we look back in 2003 and where we are today, I mean, at the time, at the very beginning of e-commerce in Southeast Asia, we don't have many forms of payment instruments. With limited number of credit card penetrations, it was a slow start. And only in the late 2010, e-commerce slowly emerged. And now, thanks to the introduction of various forms of payment methods from the government, we are now seeing faster pace in innovation in payment ecosystem. Like Arthur mentioned, we have a lot of mobile wallet coming up, and incumbent players are also coming up with their own services to compete with the up-and-coming fintech player. Yet, like you rightly mentioned, we still have a long way to go to catch up with countries like China. But I think we are on a good path right now, and we have a lot of country government establishing their own domestic payment ecosystem, and even they are interconnecting between one another. Our role as a payment platform provider is to make sure any company who would like to sell to a particular population has the ability to sell, regardless of how the buyer wants to pay with, be it with the credit card or debit card, all the way to mobile wallet from their mobile device. So that's the key we are looking at, and we are seeing very important shift in the landscape where regulators are introducing their own national payment standard, such as SGQ in Singapore, PromptPay in Thailand, and a few other standards across the region. And I think this is going to continue to improve the payment landscape around the region. And it will soon be somewhat similar to what China has achieved or what India has achieved for the past 5 years. We are really, really excited to see that change. And on top of that, as a payment platform provider or as a payment service provider from anywhere, from the consumer payment provider like Singtel or enterprise payment provider like 2C2P, our job is to make sure there's a seamless payment experience. Payment has to be out of the way of the customer, and consumers should not even know that they have to go through a certain process to complete the payment. It should be a smooth transition. And yes, we are not there yet, but I think we are nearly there. We are on our way.
I think you've raised two of probably the biggest bottlenecks that we as investors have seen in the evolution of early stage fintech in Southeast Asia, which is around shared infrastructure, payment rails, and standardized protocols, along with this issue around regulation and how that differs by market quite substantially.
Yes.
When I think about these two bottlenecks, they, underpin some of the major hurdles that we face to going to a frictionless, seamless kind of, world where the underlying consumer, the enterprise, has no idea that that is a financial service or a product that they have consumed. It just happens in the background.
That's right.
Where do you guys stand on this? Because both regulation generally tends to lag, and infrastructure tends to be a top-down driver. So how are you guys positioning within your respective businesses, either on regulatory affairs or on the agenda around shared infrastructure to manage this? And maybe because you started that topic, you can start with your kind of experiences in each of these markets, but then I'd really like to get Arthur's thoughts as well in the context of their aspirations in banking.
Yeah, I mean, when we talk about regulation 10 years ago, as soon as we use the word regulation, we only think about, okay, central bank coming to audit us, to look at our processes, and to ensure that consumer or customers' monies are safe, and we follow a specific security protocol, or we follow specific operational procedures to secure the transaction. But nowadays, it's slightly different. Regulators are now providing us much more. They provide us with the protocol standard so that all the players can adopt, which is a big change from my point of view. China has done that independently through private organization. Now they have two private organizations successfully establishing this payment infrastructure. In Southeast Asia, at least, I see it's going to be slightly different. This will be led by the regulator establishing their own payment infrastructure, and all the industry players, bank and non-bank alike, will join in to innovate on top of that infrastructure. We see that already happening in Singapore, Malaysia, and Thailand, soon to be in Indonesia. And I think that is a new shift in regulatory style of managing the FinTech layer or ecosystem.
Yeah, and so Arthur, if I can ask, how are you thinking about this? Because financial services has a high degree of domain-specific risk, both on the regulatory side, on the execution side. Where is Singtel, or how is Singtel positioning for this? Because to move from a very different sector like telcos into a sector like banking and financial services is no mean feat.
Yeah.
How do you think about this in the context of your internal resourcing for that?
Sure. Okay, thanks, Dinesh. I think for our Singtel group of companies, I think something to note is that at least for our regional footprint in Southeast Asia, every telco that we own, whether it's Thailand, Indonesia, Philippines, or Singapore, it is the number one telco in that specific country. So it's AIS, Globe, Telkomsel, and Singtel in Singapore. And being number one, I think comes with a lot of responsibility. And telco businesses and the industry is a regulated industry. So we actually have very deep relationships with regulators. And on top of that, actually maybe not a very widely known fact, is we've actually got several financial services licenses already, which have existed for years, some even decades. And we have remittance licenses because of direct carrier billing, because of our remittance, our cross-border mobile remittance business. So during the good old days of SMS, right, that's how remittance started, or money transfer started between SMS accounts to SMS accounts. So that would require a license. Now we have actually evolved that into mobile wallet to mobile wallet remittance. So today, actually, we've got, we're at probably a run rate of almost 800, actually, we will likely end our financial year with total remittance volumes of close to $1 billion across the region, across Southeast Asia. So we already have licenses. In fact, we rely on those licenses. But more importantly, as Aung mentioned, is the trust that we have with the regulators, because we're not fly-by-night newcomers in this space. I mean, all of us are number one telcos, and we know the responsibility that the regulators would want the operators to have, and also the importance, because if something messes up, we're the number one telco, most customers will get impacted. So the service quality and the standards are already there. We're not looking at this. We're not coming, in with, a level playing field, or rather, we're not coming in at ground zero. We're at least coming in with the mindset that we know how to operate, standards or business where the service standards need to be very high, and the compliance levels need to be very high as well. So we're coming in from that mindset, and I think that helps a lot. And also, as Aung rightly mentioned, the regulators here are one of the most progressive regulators, not only in Singapore but around the region. Prompt Pay, SGQR, right? All these new kind of payment standards have actually come, across very, quite a while ago already. I mean, for Prompt Pay, I believe it was introduced 2-3 years back, and it's very progressive thinking. This allows for QR interoperability, and that's very progressive, and that really allows the operators or the new fintech players, the new and old, right, to kind of play on a very level playing field and be able to actually ramp up very quickly. So I think that's how I think we intend to operate. Of course, there are areas in the area of insurance, for example, that at Singtel, at least in Singapore, we cannot participate in. Or even taking deposits from customers, and hopefully with the acquisition of more licenses, then we will be able to be involved in that. So that's how we intend to kind of operate around the region. And actually, sorry, to one more point to build on what Aung said, right? Because of the mindsets of very progressive mindsets that our regulators around the region have, I am actually very optimistic that we can grow this industry very quickly. Because I think there is a concerted feel that financial services will be, or rather with technological advancements in financial services, it will be able to bring and really democratize the whole space here. And with the mobile first population that we talked about, it can actually reach out to a very broad population base and a very deep population base. So I think that's something politically as well. I think it will be very receptive among the governments around the region.
Can we take a step back and then also think about this not just at the kind of local and regional level here in Southeast Asia, maybe take a global perspective? And Bill, in the context of where Microsoft is positioning themselves, are you the plumbing, or do you perceive yourselves as being the plumbing partner to various industries, to various sectors, to allow them to build financial service capabilities? So is this going to be a kind of principal model, or is this an agency model where it's third-party solutions versus in-house? How are you building out your financial services practice globally?
Sure, and it's infrastructure platform capabilities beyond just pipe that add first-party capabilities and value on top of that as well. And look, our journey to the cloud as our own business model changed to think about our capability sets moving to the cloud and driving the vision of infinite compute, infinite network, and infinite data capacity. Drove a mindset of being able to do that for ourselves, obviously, as we move from on-premise software licensing to the cloud model. And so as we thought about that ourselves and being able to offer those products and services around the world, we had to think about that infrastructure capability and enablement capability to do that. And then that extended to how do we now serve that for our customers. And when you extend that to serve financial services industries, that will then take you obviously into not just thinking about how we offer that from a compliance, control, regulatory perspective in the cloud, but obviously taking it to a different level to serve financial services institutions, which meant that we had to speak with regulators around the world in order to, one, have them understand our product and capability set, and two, as we educated them on our product and capability set, talk about the programs that we were structuring to actually help our customers think about how do they build, design, and deploy workloads and infrastructure to the cloud that they could then sit down and describe to the regulator to show that it did meet regulatory compliance, resilience controls that they were looking for. And just as importantly, have the regulators feel comfortable that moving to the cloud did make sense. So I think that barrier, Aung, to your point, that doesn't exist anymore. I think now the regulators are saying, okay, how do you show me? How do you prove it to me? And how do you show that the controls are in place? And so we have to do that, and we've built programs to do that. The criticality of it now is data and data residency, and that's the biggest issue now around individual countries and or regions thinking about data residency. And as you all know, that has meant the extension of us being able to actually have data centers around the world to actually deal with data residency issues, to actually have data remain in country. But even that conversation is expanding, right? MAS in Singapore is a great example of working with the US around data sharing and data movement policies in order to move data to open that up. So that's there, that infrastructure is in place. And then Jinesh, to your question, from our perspective, we will have first-party capabilities around our cloud services, obviously in the collaboration space around Office and Modern Work, in the customer management space and information space around data and AI and our CRM platforms around Dynamics 365, and then on computing and analytics with Azure. We will use those capability sets so our customers can build on top of that and leverage our capabilities to do that. But critical to that and the excitement about using that platform is how our partners leverage that, either by themselves, like Aung's company or Arthur's company leveraging our capabilities, or partnering with other FinTech and technology companies where they're bringing their third party to combine with our capability set and what customers want to build. That set of capabilities is what we're very focused on. And the simplification of all those capabilities to actually be configured and to actually, we use the term to say, how do we get to the cloud experience faster, quicker, easier, and in a compliant manner? That's kind of the objective, right? If you think about the simplicity of saying, I want to create an application and then put it in the cloud very quickly, how do we do that quickly? That's where we think the excitement is, because there's going to be tools that allow that to be much quicker and faster. And so the focus is first party, yes, around our capability and our building blocks and our infrastructure, but very much want our partners to build on top of that. And then collectively, we go to our customers in tandem to solve those solutioning efforts.
I think you touch on a point which I think is an increasing aspect of the way we think about investing in early stage as well, which is buy, build, partner. And it depends on which part of the value curve you sit, right? And how early your business is. You know, interestingly, I noticed that 2C2P set up their own VC arm to compete directly with the likes of us. You know, I jest, but the point here is that we see that the evolution of both investments and partnerships and building to scale requires skill sets that may not be within your organization. And we would be the first to say that as investors. So when you're thinking about this, given the fact that there are some predisposed skill sets and strengths that you all have in your respective organizations, what do you think about crowding in third-party capabilities? And you know, do you acquire, do you build? Because all of your different mandates will shift and change as your customers' journeys and experiences change. So, you know, how are you thinking about that, Aung? Not just in terms of investments and kind of broadening your payments ecosystem, but in Arthur's case, once you start getting a digital banking license, you know, how do you think about that? Is there a buy versus build? Is this an open-ended kind of, let's see what happens? It would be good to get some sense as to how you guys are thinking about this.
I mean, for me, it is, for our organization, it is pretty, it really depends. Okay, simply put, we usually use technologies and building blocks and capabilities from Bill's company to build our solution and offer the services to our enterprise customer. And then we partner with Arthur's company to accept payment methods from the company he is offering. So we partner with multiple companies like Singtel, AIS, so that we can provide all these payment methods. I mean, all his customers can now enjoy product from our enterprise customers. So, I mean, in this panel alone, I'm right in the middle of these two gentlemen. One, I use as a service provider. One, I use as a partner. And obviously, I mean, even for the investment, although we have the investment arm, we will still need to work with someone like you so that we can co-invest together and then we can go to market together.
Yeah, so Arthur, how are you thinking about this?
It would really depend on the specific situation, but over here, I think what we always ask ourselves, what is that secret sauce that we can continue to have to really, make or delight the customer, right? Whether it's through our, bread and butter provision of data services, videos, gaming content, AI, VR, payments, financial services, insurance, right? And I guess once we can answer that question very clearly for each specific situation, then the buy versus build versus partner decision becomes a little bit easier. And I absolutely agree with the comments made that, in this day and age, right, there's no way we can do it on our own, right? Regardless of how big or how small our companies are, right? It's really, I always like to say in this world, right, our partner can be a customer in certain situations, can be our vendor, can also be a competitor, depending on what situation, right? But if we just look at it from a single dimensional lens, I think we're losing out on a lot. So my perspective on things, right, especially with regards to financial services, Jinesh, I mean, you rightly said, right, that there are so many capabilities that it's very hard for an organization like start everything and hire on our own and build capabilities, right? So where we are lacking, we partner. I mean, classic example is if we do win this digital bank license, we partner with Grab, right? And we have no qualms about taking a minority stake. In fact, in this JV, we take a 40% stake, sizable enough, right? And we have certain rights and that we think that we'll be able to contribute and add some value and some serious value to our joint venture. We've also partnered with insurance companies like Integra, and investment advisory companies and all that, where again, we don't either because we don't have the licenses or we don't have the capabilities. We rely on others, right? But they themselves see value in us, right? It's our customer base, our ecosystem that we have. And depending on what area in financial services, we also have the tech and we have the channel. So it really depends, right? And I do think in this day and age, it's very important to be very flexible in mindset, and but really focus on what makes sense for our customers.
And can I kind of take that from the standpoint of competition for all of you guys? You know, some of the larger tech companies, and not to say that Microsoft is not a tech company, but some of the larger tech companies are really expanding quite aggressively into financial services. I mean, Google is spending a huge amount of time, energy, and capital on their whole payments infrastructure themselves, right? And I think typically payments tends to be a lead gen into pretty much all other types of financial services. So how are you guys thinking about competition broadly within that kind of context? And Bill, maybe starting with you on first party solutions, is there a scenario where we suddenly get Microsoft Pay in the future?
Right now, no plans for that. Right, we've been very clear about our desire to enable and support our customers with our capability set and our first-party solutions and tools versus actually competing with our customers. We're trying to give them capability so that, to Arthur's perspective, they can create their secret sauce. And we want to give them thoughts and ideas around how to do that and the capability sets to do that. But we don't want to compete in that space. We want them to be able to create value with their data and to be able to bring in and augment their data sets with other partners in industry, with other partners from their competitors, and be able to do that in a confidential way so that data creation can be valued with that organization's data and or with partnering other data. And so we're thinking about technologies to allow that data sharing so that signals can be brought together and shared, but the confidentiality of that can still be maintained by the owners of that data. So we'd like to create that approach so there's not a view that there's one dominant owner of collector of that data, but everybody can participate and create the ecosystems and partnerships that they want to, either in an ecosystem perspective or a binary perspective around the usage and sharing of data to create value. So that's where we're spending a lot of our time thinking about how to enable that. And you'll continue to see our cloud services and tools to come out to support that kind of model. So no, we're not going to come out with first-party solutions to get into banking, but we do want to create the environment where if there's an organization that wants to augment their customer experience with financial services, we want to actually bring those partnerships together. We want to bring our financial services customers together with retail customers or automotive customers or manufacturing customers, and actually have the capability and the platforms to actually create that embedded experience. And that's really the challenge, right? How many people have thought about going into banking, but then when they get up to that line to actually think about, ooh, do I really want to be regulated? Not quite. Exactly. So I think banking partners see that as a way to, back to my comment earlier about extending that horizontal model to being able to offer services. So if they have the API structures and the data sharing structures to actually offer their products and services in a white label format or even a branded format, so others can create that experience, but the controls, the regulatory environment of the payment solutions are still managed by the financial institutions, but both parties gain. That's what you'll see. And you're actually seeing that with some of the competitors you were referring to, Jinesh, as well. They're actually using other banking providers to actually provide those services too. So we want to create that synergy and be the technology and capability set to allow that to occur.
And maybe probably to kind of round this entire debate off in terms of how you see the future, you know, where is your core focus as a business to capture what you feel to be the biggest potential opportunities within embedded finance? If I was to look out 3 years from now, 5 years from now, how would I think about Singtel? How would I think about 2C2P? You know, where would they be? Would 2C2P be the one powering everything in the background? We never hear about them, but they end up being a multi-billion-dollar business. Is Singtel going to be the brand, or are they going to be purely an infrastructure provider? And will Microsoft actually continue to be the layering, right? The infrastructure, the core platform capabilities. How are you guys thinking about this from a longer term perspective, and kind of where do you see yourself 5 years from now? Maybe start with you, Aung.
Yeah, I mean, for us, when we look at payment, while innovation from the consumer front is happening around the world, from Singtel to Google Pay and Apple Pay, uh, at the same time, we also think that fragmentation will continue to happen. Every country may have their own standard locally, but different countries, in order for multiple countries to interconnect, it will take some time. So our job is to make sure we manage that fragmentation and we manage that aggregation so that our enterprise customer can have one point connectivity to have access to all the markets. We will continue to do what we have been doing for so far, and we have been providing our service to large enterprise without knowing we exist by the customers, and we are pretty happy with that position. No issue with not being known, and we will continue to do that throughout our lifetime of the company.
Arthur.
Okay, what do we want to be when we grow up? I think it's really we would like to be a digital services platform, right, for our customers, right? And again, to my earlier comment, we've got to delight them, right? Whether it's through entertainment, through transactions, through e-commerce, and we're not going into e-commerce, but it's partnering with some of the e-commerce players, and also help them through financial services, right? I think the opportunity is for us to engage the customer more and more each day. I think that's our objective.
Yeah, and from Microsoft's perspective, 5 years from now, hopefully we're continuing to drive our mission, which is pretty broad as it's defined right now, right? Empowering every individual and every organization on the planet to achieve more. And that's what we're striving to do. We want to help Arthur's organization achieve that customer vision that they're creating. And the technology and the data and the insights and the analytics and the IoT formats that could provide data into that model, and the technology that goes into the phone that could leverage software around that. That's what we want to create for Aung as he thinks about new business models and connectivity of his payment rails into other country payment rails and the integration of that. What's the underlying technology that can make that happen, right? Around interfaces, around APIs, around data exchange, around value creation. Ultimately, we've talked about consumer businesses, but it's the same in the business-to-business space as well too. So, how do we think about that future, Jinesh, that you're potentially thinking about that we haven't thought about around the corner? And we're thinking about that every day around what that future might look like. But we're thinking about how do we enable it with our technologies and our partners and our investments to make that happen. So it's exciting, right? The ramp up. We were just talking about this internally today, right? The amount of data that's going to be created, in the next, 2-3 years is going to be equivalent to the amount of data that was generated in the last 30. So that's the amount of compute power, the amount of extensibility of technology that is out there that's creating data. And so how are we going to mine that data? How are we going to create those experiences? How are we going to leverage it? And so that's the exciting part about what's happening.
Fantastic, guys. I think we're very close to the end of this session now. I'd like to thank you all for taking the time. I think this has been a pretty broad-ranging set of discussion points, and it's very helpful for me as an investor as well to understand how you guys are looking at the broader ecosystem and the specific areas that you are focusing on within your businesses. Thanks again, and for anyone joining in to the Singapore FinTech Festival, if there's any questions for any of the panelists, by all means, please feel free to reach out either to the organizers or to them directly. Thank you all for your time. Really appreciate it, and look forward to hopefully meeting in person at some point when we're not in a teamed, Zoomed world.
Thank you for the opportunity.
Thank you
Thanks,
very much.
guys.
Thank you.
Thank you all. Bye.
Take care.
Thank you, guys.
Thank you.
Thank you.